Hey everyone, me Kevin here. So I wanted to give you an update on my short, which is really a hedge, right? When I made my short video, I think a lot of people, they see a title and they're like, oh my gosh, $3.5 million short the market. This person's a bear. He's a suit. Let's try to squeeze him or whatever. You can't really squeeze somebody who's basically investing in an inverse ETF because they're swap contracts and it's not short interest. This doesn't work that way. It's really just the inverse performance of ARK. Well, ARK is up today, right? And a lot of stocks are up today. They were actually down miserably this morning. And what I'm going to do is I'm going to give you a breakdown of what happened in my portfolio today. So how much did I lose or how much did I make? I'm going to provide that. I'm going to give you the exact numbers. So, so here's the thing. This morning, on sort of a day-to-day trade, this morning I was killing it. Absolutely killing it. ARK was down like 2%. Tesla was up. Tesla was down 4%. The market looked pretty poopy doopy, and it kind of reiterated, okay, well, this is why you want to hedge a little bit, right? Well, then everything changed. Then we got the consumer spending data, and consumer spending data came in so much higher than expected at 1.3% growth month over month. People are basically taking the higher spend and the higher savings that they've had built up in personal savings over the last few months to really 18 months when I say few months. And the wealth effect of people feeling richer with their real estate and maybe people wanting tax write-offs to go buy crap towards the end of the year, that they're spending money like freaking crazy and nutso. And so consumer spending went through the roof, and ARK went from like -2%, Tesla went from -4%, and a lot of other stocks went from big old negatives to all-time freaking new highs. ARK went up like, I think they closed somewhere around 1.6 or 1.7% on the day. Tesla ended up fractionally like 0.5% on the day, which is a big recovery from the down that we were going to see. Etsy was up substantially. Matterport, Etsy was up over 6%. Nvidia about 3%. Matterport substantially. We had some really fat, beautiful, incredible gains in the market today. And a lot of it based on consumer spending, which is very, very exciting. Now, these are the kinds of stocks that tend to U-turn when we get FUD in the markets again. FUD might come from congressional uncertainty, government shutdown uncertainty, COVID uncertainty. That's usually when we expect consumer spending to decline. For example, somebody asked me, hey, Kevin, you mentioned that you think that PayPal is down potentially because of lockdowns in Europe. Well, PayPal is mostly online. Wouldn't that be good for PayPal? No, not necessarily. Because when you get, and also keep in mind that Kathy sold PayPal a few days ago, or at least sold some of her PayPal while it's like big time down. So she's not buying the dip on PayPal, but she's buying the dip on Zoom. She thinks Zoom's like a Cisco. I don't know how I feel about that. I know Zoom does a lot of other things than just like, oh, let me Zoom you. Chat services, phone services, and some incredible things for their commercial clients. But I don't know, maybe because I'm not a commercial client, I'm not so familiar with that. Maybe because she's more familiar with this. Or she spent the time to be familiar with it. But anyway, good for her. So, okay, so where where are we going with this? Yeah, PayPal, COVID. Here's the thing. When you have lockdowns in places like Germany or Austria, what you're actually doing is you're leading people to spend less money. Even though the money they do spend is more likely to be online than in person, generally when we go into lockdown modes in areas, people overall spend much less money. That's why consumer spending is so hot right now compared to, for example, when Delta was really spiking in America at the end of July and beginning of August going into September, because people are happy, like they're going out, they're not so worried about COVID in America. Now we got a red pill from Pfizer that you can take potentially. I'm not sure if they got the EUA yet. I don't think they did, but soon you'll be able to take the red pill from Pfizer if you're not vaccinated and you get sick, or you're vaccinated and you still get sick, whatever, right? So anyway, consumer spending usually goes down in lockdowns, whether it's online or in person, and it goes up when there are feelings of euphoria. And right now we've got the wealth effect pushing consumer spending to the frickin' moon. Supply chain issues make some consumer spending a lot harder. It's a lot harder to shop Nike. It's harder to shop Nordstrom's or Macy's. It's a lot easier to shop Etsy. When you look at the stock charts, they tell the story for you. It's very blatantly obvious. So Now, let's get to the point of my portfolio. I'm heavily exposed to things like Etsy, Matterport, Tesla, things that did very, very well today. I did hedge. Hedge is an insurance policy in the event the market goes down. If the market goes up, it just means you have a lower net total return, right? So I did the math. I added up just my largest accounts. I added up my JP Morgan. I'm up a little over $190,000. My Webull, I'm up a little over $185,000. My Robinhood up about $40,000. And so when I tie these together, the exact math was, well, it's not exact because I'm still getting around, was about $420,000 that I'm up on the day, including the L that I took on SARK. Now, when I separate this, that means my entire portfolio was actually up $520,000 and my SARK position was down $100K today. That's a lot on one position, but then again, that's also a $3.5 million position, which is like a little fart. You know, it's like a 3% move or whatever. And that's actually, I think, my total because ARK started rallying a little bit into the close yesterday. So anyway, yeah, that position's down. It's a hedge. So my portfolio, and this is why I say, like, when people misconstrue and think that, oh, I'm shorting the market, not really. I'm creating a little bit of an insurance policy. I think I don't know if I'm gonna close this position early because I do think we still have the potential for pain once the congressional drama comes around. I don't know if it's gonna be worth holding on to the short through then, because I could lose a lot of money on that short position between now and then. And then if the market falls, you know, maybe it makes sense to have that established a little bit closer to maybe when the congressional drama starts, which could be at the end of next week or the week thereafter. You know, maybe sit out shorting for a week. I'm not going to make any changes. Well, I didn't make any changes today. But as soon as I make a change, as always, I'm going to send an alert in the Stocks and Psychology of Money group. So everybody who's in there will get an alert anytime I make a change. And I make it very clear, just like I did when I posted this notification, that this is only a hedge. Like, I'm still 80%, 85% long on this market. And so, yeah, my hedge cost me a little bit of money today. When you look at it as a portfolio return wise, because it's not a perfect hedge, it's not perfectly aligned, it was about a 20% cost, the insurance wise. But hey, you know what? Still very long-term bullish, very long-term excited. And this gives you a little bit of an update in terms of how a hedge could work, what it costs you when the market keeps going up. But either way, in terms of the market today, it was a good day. A lot of people made money. I made money. I hope you made money as well. And if you didn't, I hope you make good money when we get back to work on Friday. In the meantime, enjoy your Thanksgiving. Check out the programs and that expiring coupon code link down below. And folks, see you in the next one. Thanks so much. Bye.